so you're going to end up with more losses, and you keep putting them on your list because they're just of a certain price, but it may not matter because it's just not moving clean enough. So I'd pass on that too. HBI, I think this one, Kels, is going to be slow too. We need hotter. Right? Think volume, daily setup, float, range. This box might be a little bit okay. It doesn't trade very well. You're talking maybe 30, 40 cents a day. We need more range. When you think about like range, like if a stock has a bigger range, Kels, then you can trade back and forth within it. Hey, good morning, everybody. How are you? Shreyas, your list is good. Good morning. Hey, Eric, how you doing? Guys, market's sitting right at resistance, but we're starting to gap right over it, so that's good, right? We've got our... This might be a little bit okay. It doesn't trade very... Whoa. Sorry, I had a little extra volume. Cool. So we're starting to break over that 200-day moving average, and that's been what's been holding us down. So that's actually really good. That's showing a lot of strength in the market. What we're starting to see, right, beyond this kind of like this V-shaped rebound, is that the underlying kind of strength in the markets has been huge. We are seeing breakouts all over the place and really good earnings plays. Man, the Gapper list today, they had more stocks on it, you know, today than I've seen in a long time, right? And that's indicating volatility, but it's also indicating a lot of good earnings reports and stuff like that. So I think as long as now that we've broken over this 200, we're starting or getting there, right? We're starting to get into some air-free zones where, you know, we may have a little bit more upside. We're not even overbought yet, so we definitely have it. The SPY is kind of right at that sweet spot too. We are day 3 of a move, but overall, we're just grinding higher. I think there's just a lot of positives that are happening right now. So let's take a look at the watch list here. So this DBD's looking zesty today. Hey, Frederick, long time no see, buddy. We got to catch up. So break over 200-day moving average. You got 74 million share float. You're getting a nice pre-market movement there, right? When you think about like stocks, we want to align on multiple time frames. So I've got a stock now, right, that's breaking over a base breakout here. Then it's breaking over its 200 SMA. If we get volume expansion, we get an intraday pattern. Now we check off all the boxes on our checklist of what we think would be a hot stock. And so the only caveat on this is the float for a small cap is a little bit thick, but that's okay. You don't need 5 million share float stocks to have fun, right? You nice steady grinder. I'm not talking about, right, just like something that's slow, but something that's just a nice steady grinder. You can still over by the end of the day, like a Cody, right? By the end of the day, it's a lot higher than you think, and even though it just moves like a nickel at a time. CRTO, so you got to break over the 200-day moving average over here. So you got to break and hold. This one actually does move pretty well. You're in the right sector. It's in the tech sector. Tech stocks, tech earnings have been hot. You know, you guys saw what happened with Shop yesterday. That thing dipped down on earnings and then just got bought up and reversed completely at the open. The market's just hot for these things. I think that one's one to keep on the list too. This LCC is breaking out to all-time highs, or close to all-time highs. You're right at that sweet spot here from 2015. So it's a multi-year breakout. So you can see this thing's going back like a good decade. So it's going back a good decade. So if it can kind of break and hold over that and build some type of pattern, I think that, you know, this one has a chance. Not the top of my list because, frankly, this one doesn't have crazy intraday range on it. So I don't want to put all my eggs in this basket. I think the DVD is going to move a little bit better. What we'll do by the end of this is kind of narrow this list down into a few of the faves and then make sure that we're really focused in. But there are just going to be some days where there's a lot more stocks popping than other days, right? Which is a good thing as long as you're not, right, scanning all over the place and keeping your eyes all over the place and you have some way to manage it all. This YGI is kind of popping out too. this stock kind of runs like a little bit like a PYX, where you've got yourself like in a big long range and you're starting to come out of it. The issue on this one's going to be liquidity. I give this a C, mostly because it's e-liquid. But if this thing pops like 1 million shares in volume at the the first hour or something, and that trend sets, then I'll start to let this thing, I'll start to look at this thing for patterns. Same kind of deal, right? Like with the PYX yesterday. Anybody trade this bad boy? Man, I had this thing like 1,500 shares at 19. This thing was hot, but once the trend sets, then it's much easier to come in and take all the patterns. It's thin, it's got a spread, but once that trend set, now you were able to come in and hit the dips and really let this thing explode into the way that it wants. And that's what you got to do when you get a thinner stock, one that has a thinner volume profile, where you have a spread and then there's spaces in between its profile where you just have that lack of liquidity. You want to really let that trend set and then not chase the thing, buy it on the ask and trying to buy it into spikes, right? And this one is on watch today for red to green. Out of the non-gapper plays, this will be my favorite. The issue with this one is going to be, right, does it push at the open, and then how does it react around the previous day's highs? So when you think about stocks, right, stocks trade around in boxes, right? And so if you're stuck and you're doing patterns, but you're under the previous day's high, that strength can get faded off. But what happens is if you bust a pattern and then you break over the previous day's high, then what's going to happen is now you're in a supply-free zone, and now the dips down to support start to hold. Versus right now, like if you have dips down to support, if it pops, it's just going to run right back into resistance. So when you think of stocks, like always think about it as like a box. Old resistance becomes new support, and vice versa, right? It's just a tried and true way of trading. My fave for today is this AVLR. AVLR is in the hot sector, which we know, which is software application. This is a recent IPO from last year. When IPO stocks have earnings out, all of a sudden people are thinking like, okay, this is the next Microsoft, this is the next Dell Computers. And so IPO stocks, when they have earnings, they can have like tremendous volatility because it's a brand new issue. Brand new issues tend to have much lower floats. They tend to have lack of like analysts covering it. And so what happens is when they have that kind of kick-ass earnings, then you can start getting huge range because it's not on a lot of people's radar, right? It's not like a Bank of America or an Apple where everybody's watching it, and then as the earnings and everybody just yawning like, yeah, we kind of figured, right? So something like this, because it's not as watched, it's a newer name, it can give you some nice shreds. So we'll watch this thing for an ORB at the open, right, which is a push at the open, 3 candles sideways and a go, or a pullback to the 9 EMA. So let it gap up and run back to the 9, right? So your 9 EMA pullback is more like this, right, where you're going to have more like a PYX move where you gap up and then you don't ORB at the open, you start to grind your way back. When you get that green candle to hold, that's when you want to, right, take it for the bounce and then let the trend develop. So that's how you want to always run a quick pullback buy, right? It's a push, pull back to the 9, green candle to hold. That's going to give you just enough confirmation to come in and play a little Shredzilla. This XL is looking zesty here. The key is going to be this trend line break. If it can kind of bust over this kind of 2330, 2340 range, it should have some movement, maybe even some potential into the 25s. It does move fairly well, even for a thick stock, 294 million share float, but that's okay. In general, float is one thing, but range is another. Sometimes you can have a thicker float like an SQ. SQ's got thick float, but it's got really good intraday range. This one actually moves pretty well. It has good liquidity. I won't take a trade in this, though, until it breaks over this trend line. All right? If you start to rip a pattern, but you're under resistance on the daily, the patterns can fail a lot more than if you're actually above resistance, right? Think about always supply and demand when you're trading. Where are the booby traps, right? Where are the shares coming down on my head? 8Q. As long as this thing holds under 8, I think this one's a candidate for an ORB too. This one's going to move probably pretty well today. Issue is just going to be the SSR is going to be on this one. So when the SSR is on it, they can squeeze at the open. So you got to wait it out, right? Make sure that there's an actual pattern. FIDI, there's no recommended float. The lower the float, usually the more volatile it is, but also it's got a thinner profile. They'll have spreads. They can squeeze randomly, but also when you catch them, you can really nail big runs. Where like something with the thicker float is going to have no spread, and it's going to move like a little bit more steady. You can still get decent percentage, but you're not going to get like a 50% move or a 100% move. You know, like a higher float, you might get 10% moves, 15% moves, but they're easier to trade. A lower float, you could get 50 or 100 or 200% moves, but they're harder to trade, harder to control. And so, like for me, like when I was a new trader, you know, all my biggest losses happen on low float stocks. Like, you know, you're in it, and when they're working, it's great, but when the bottom drops off, you just lose so much damn money. So you got to have really good risk management. If you do, you can make a lot of good money at it. You just got to have some stones and some good risk management. This MDR is looking pretty good. You're breaking under 2 levels of resistance, over 2 levels of support here. This one is going to be a little bit of a grinder, but it does move pretty well. And then I definitely keep Twilio on the watch list. It's not moving around right now. It's got good range pre-market, but the trend hasn't set. It's not really gapping up or down. It's a tweener right now. So let the trend set on this one. You're not going to know exactly which way it's going to pop. It looks like it's just popped down $4. So right now it's opening weak, but not that weak compared to its close yesterday. So on something like this, it's heavily watched. It's in the right sector. So people are going to be, you know, trying to trade it, but you're going to have to let the trend set up on this. We don't necessarily know which way it's going to go. Yeah, Trip looks good too. It was just more a matter with Trip of like, you know, we already have so many. You know, which ones do we choose? Rank these things. When you get gappers, start ranking them, right? Like you don't want to just come in all guns blazing and not have an idea like which way to kind of go with these things. So I use a 6-window layout like on a different monitor where I watch these bad boys. That way I'm able to keep an eye on them. So let's make some money. Market starts in 1 minute. As always, I'll be in the Bulls on Wall Street chat room, shredding, trading live, doing that stuff. So anybody wants to come in the chat room, you let me know. Let's do this, people.